Folks, welcome to Sunday Night Futures Live. It's been a week since we had a live stream. We were not live on Thursday. I've been away. I hope everybody had a great 4th of July weekend. My birthday was on the 3rd, so I took some time. I had my brother come up with his wonderful wife from Florida. We went out to Greenport for the weekend. With more family, friends, etc., and just had a blast. Great time. I'm exhausted, but a really great birthday. And if they happen to be listening, thank you for joining in. And we have quite a bit to go over. If I can get an audio check, I'd really appreciate that. Let's check comments here. Let's say hello to folks. We do have the futures open. I know I'm not sharing my screen. Franklin, what a great 4th of July. Yeah, Franklin, it was really, thank you, first off. Yeah, it was outstanding time. We had, my birthday was actually fairly quiet. It was just a relaxing day. And on 4th of July, I had a party at my house. We had the pool open and whatnot. And great time there. The next day we went out to, as you know, Long Island's North Fork, not the Hamptons, but the other fork. On the North Fork, that's more of a chill, laid back, more Nantucket, Martha's Vineyard feel. It's not that pretentious Hamptons crowd. So really great time. Thank you, Franklin, for the audio check. I appreciate that. So awesome time. I hope everybody had enjoyed their weekend as well. Sand is going higher. 15-day or over 30 is a buy. Audio is good. Thank you, Larry. We'll check out that chart for you. Let me jot it down. And on that point, Larry, you're a member, so you have access to the members' request. But I've been working on a new engagement tool, and I'll give you the higher level. This really doesn't impact members per se. Do I have it up here? Members, of course, will have access to it. What did I do with it? But I'm starting up a new forum, and it's going to be called Ice Cream Stocks. It's a play on words, but I'm building it out now. I'm trying to get the preview in here. It's not going to work for me. I guess I could show this. It's just a view of what's coming down the pike. So there's going to be a free area, and we'll put out some. A lot of the stuff that I put out is a free opt-in or free sign-up for, whether it be my top 5 favorite candlestick patterns, any infographics on how to trade extreme oversold stocks, overbought stocks. Whatever I come up with, that'll be listed as in the free area, which will be Ice Cream Stocks. And then there will be another area called Ice Cream Options. There will be of course, the members premium area. That's where we'll be spending most of our time. But for those that are new to me and you want to know, what we're doing here, there will be a free area. And in that area, you'll be able to enter the symbols that you want me to take a look at. Obviously, it's going to go by members first because we have limited time. Members first, they always get priority. Then we'll take the first 5 or 7 stocks that are in the free area, and we'll keep it organized because the live stream, trying to capture all of them, is a bit difficult at times. Takes up too much time, too much dead time of sound. So this is the next generation. So we're going to be scaling out here. I have a launch date I'm moving towards no later than Labor Day weekend to have that launch. So I'm going to be in the coming live streams having a pre-launch. You could sign up. You're probably not going to have access right away because it's not going to be built out for a while, but it'll be a community. You could chat, whatnot, and that's it. More to come as it evolves. So let's share my screen. Let's talk about SIX. Yeah, I've been thinking about that. Franklin made a great call a few weeks ago on Six Flags Great Adventure, Sand for Larry, and that stock just went en fuego. And I'm glad I was on the right side of that call because I would have looked rather foolish. Mr. Pete, welcome. So let's get to it. Let's take a look at the futures. We are live. We are live. Okay. Fun if you get a chance. You got it, Larry. Oh, Franklin from Larry. Okay, you got it, buddy. Okay. Denny. Welcome, Denny. All right. Let's begin with the E-minis. This is a 4-hour view. Let's do a closer view. 5-minute view works. Now, I think what you need to keep in mind, first thing that jumps out at me, this is only a 5-minute view, so I'm not sharing my screen. Let me share my screen. Go. All right. Caught myself. Okay. So first thing that jumps out at me here on this 5-minute view, head and shoulders setup. Left shoulder, head, right shoulder, neckline, broken. We're probably going to get a check back to this resistance level. We do have significant resistance immediately above. This is a rising uptrend line. I know we're at new all-time highs. I get that, but you could still extrapolate out resistance levels using the upper band of resistance. I'm not sure whether it's a daily or a weekly upper band of resistance, but a resistance level nonetheless. And we paused there on Friday. You can see they're trying to do a check back now, and they'll retest that breakdown point. And if we do fail, we'll come down here to 56.10 thereabouts. And I want to see if this is forming on a 15-minute view. It's only a 5-minute view. Yeah, it's formed on a 15-minute view. They're going to check back here. We're going to go positive, I think. The question is, do we break out? That's the big question. Now, keep in mind that intraday on and this goes for not just the S&P 500, it goes for the triple Qs as well. Intraday 30-minute view, 15-minute view. We had a massive melt up last week. Massive melt up. So we are quote unquote overbought. Can we gap up tomorrow at the open? Sure. Yes. The path of least resistance remains to the upside. No doubt about it going into the new trading week. The however is that we are a bit overbought intraday, due for a pullback. Would I short the market based upon that more than what I have right now? No. For a scalp, would I? Perhaps. Back to the 5-minute view. Let's create an alert here. Let's see whether or not we take out the lows of the session. We may not be live when that occurs, if it does occur. Let's check in with the NQ, the futures version of the triple Qs. And we have the same thing setting up here, where we have a left shoulder, head, right shoulder, and that neckline has been broken and now it's being retested. We have the 21 period EMA, which just got tapped immediately above. Let's go 15-minute view. You have your stochastic 15-minute time frame rising now. So I'm not going to be surprised if they take us positive here, but I think that by tomorrow we're going to get more of a pullback here to take some of the pressure off of the markets, at least on an intraday time frame. Now, looking at the Russell 2000, that's pulling back. That was down over 3% on the week, where you had the triple Qs up like what, 3% last week. So clearly, you still have a market where you have too few stocks. Microsoft, Apple, Google, blah, blah, same old names driving the rest of the market up higher. The two outliers, I should say, to be fair, NVIDIA and Broadcom took a bit of a rest last week. The industrial names, energy really tanked on poor economic data last week. So perhaps it'll bounce back this week. Looks like Berkshire Hathaway finally caught a bid. Airbnb setting up as a Bollinger Band squeeze. That came up on our search list, or our scan, I should say, over the weekend. Let's go back. Let's continue on. So RUT down spot 1.3%. Looking at the Dow. So the Dow nowhere near as overbought as the S&P 500 and the NQ. So we may get some rotation here. And for that matter, going back to the RUT, I want to take a look at potential sector rotation here, because yields dropped last week, and the small caps are very interest rate sensitive. So the declining yields should have helped the small caps, but they didn't. Now you have very close to having a Bollinger Band squeeze set up here on the Russell 2000 daily time frame, not insignificant. So we may be getting set up for a bit of sector rotation out of, I wouldn't say semis per se. Semis looked pretty good. You still have names that have pulled back, NVIDIA, Broadcom, and they may take over the leadership role of Microsoft. Microsoft closed out the week last week at the upper band of its third standard deviation Bollinger Band, so it's pretty overbought. Meta, pretty extended. Netflix has been doing fairly well. So those names may take a pause, and you may get money moving into other leadership names and potentially into the small caps, mid caps, etc. I think we have the mid caps up here for conversation purposes. Mid caps, I select them. Yeah, I did. Yeah, so very tight trading range. Again, this is a daily time frame. Very tight trading range. And at the open here, down fractionally. You have a nice little cup handle formation on the mid caps. A name, if you wanted to trade this as an ETF, would be MDY. So this is a pretty good name. What did it do on the week last week? Not a great performance on the week, unfortunately. Couldn't hold that 21 period EMA. Back to the 5-minute charts. Let's continue on. Let's check in with yields. Yields are higher. We may get a relief rally here. I mean, bonds got bid, right? Therefore, yields got brutalized last week. And why did they get brutalized? Economic data, very, very poor last week. And in particular, jobs. We'll talk about that more in a moment. So yields pulling back. checking in with the Forex market. Let's begin with the US dollar, which closed down last week. Bearish key reversal bar. If you're not familiar with what that is, link below, my 5-part video tutorial, my top 5 favorite candlestick patterns, free. DXY, 15-minute view, we are up versus the close on Friday. The question is, do we stay up? I doubt it. Checking in with the euro. Now, to drive home what happened last week, we saw a breakout on the euro on the week. Was it last week or the week before? Last week. This is this week's price action. So we broke out above this upper band of resistance on the euro. Remember, the euro was in rally mode up until you had the EU parliamentary elections. Then there was the elections didn't go the way that they had expected, and you had flash elections all across the EU for in France. I believe that election's over, and it did not go the way of Marie Le Pen's party. In fact, I think she came in third. All the leftists got together, formed a coalition, and they're in tight control of France. So unfortunately, it looks like France is going to remain in a lot of trouble for the foreseeable future because of horrible, horrible leadership. So euro, I think this is a retest of the breakout point, and we're going to go up higher. Japanese yen. We're going to go to a chart of this later on. The Japanese yen did a reversal bar last week, a bullish reversal bar, not a bullish key reversal. A bullish key reversal is when you close at the high. You're lower on the week, you reverse to close right spot dab at the highs. We didn't do that. It's a reversal nonetheless. You'd prefer to get a bullish key reversal, but you know what? Given the weakness on the yen, we will take it all day long. And it looks as though we are moving above the upper band of resistance on a weekly chart at the open here. No new weekly higher high, to be fair, though. Now, what stood to benefit from the reversal of the US dollar last week? Simple. It's what we always talk about. Inverse correlations, right? We always want to know what trades inversely of the US dollar. So if the US dollar is strong, we avoid those names. If the US dollar is weak, we go into those names. So let's talk about a few of them. Gold. Look at the move last week. Very strong move. A bullish key reversal on the week. Let's go 5-minute view here. No great shock that we're probably going to pull back on a weekly time frame. We are poised for a major breakout. I'm going to go to my saved chart of that in a moment on the price of gold. And you could throw into that mix gold mining stocks, silver mining stocks, silver. Silver has just been on a tear. You had June, which was weak. You had that bearish reversal month. Let's go weekly view. We're pulling back about a 0.5 percentage point at current. Yeah, look at this move up last week. So we may get a check back and a retest. I don't know whether we're going to pull all the way back to do a retest here. That would be a pretty measurable move, but you never know. Perhaps down to one of these moving averages. But silver is looking the bomb. It's looking really, really good. We're long of it. Let's check in with energy. Let's go to, I saw nat gas up here. Let's go nat gas. Nat gas already at the open. I think this is a buy. I got to be honest with you. All right, I just bought a contract. I already have a couple of contracts, and I wanted to buy this pullback. You've had 8 consecutive sessions where the um, the price of natural gas has declined. So the probability of a continuation breakdown, such as what we've seen, becomes less and less likely. I'm not saying that natural gas is done going down by any stretch of the imagination, but is it due for a counter trend rally? I think so. We have dropped back down into a base on UNG and Boyle, the continuous contract as well. Let's take a look at that on a weekly time frame. You have the 21 period EMA, which is rising. You have a bit of support in this range right back here in what month is that? May. You had support in this range. So we likey nat gas right here only for a speculative counter trend rally. That is it. Now, crude oil last week, where am it be? All right, here we go. Yeah, we're seeing a continuation move lower here. So we have a new weekly lower low in the futures market anyway on light sweet crude. So, that's somewhat bullish for equities because the concern about inflation becomes less of a concern. But I'll tell you, we were talking last Sunday about a potential weekly breakout of crude oil, light sweet crude. We went over the weekly chart and I had that wedge formation. And I said, watch out for a possible breakout here. They tried to break it out last week. Then you had those jobs reports that came out, and it just fell apart. The revisions on jobs data was just really horrific last week. So again, we'll talk about that more in a moment. So crude oil, new lower lows. That does not bode well for the energy stocks. We are positioned there, so it looks as though that's going to take a break for a while. I'm going to hold on to it anyway, because I think ultimately this inflation story is not going to go away. You saw Treasury inflation protected securities rise last week. Why? Stagflation. You have stagnant growth with inflation, stagflation. It's the perfect environment for commodities. Let's take a look at agriculture. I know soybeans finished the week off strong. I want to check it with palladium. We're long of palladium. I think we hit a bit of a turning point last week. It's down over 0.75%. Here was the week last week. Nice breakout. So it looks like they're going to do a touchback and retest support here. So we may be adding to our palladium position. Okay. Let's go agriculture. Did I do silver? I didn't do silver. Sorry. Silver. I think I did do silver. Okay. Silver. If I didn't do it, I'm so tired from this past few days. It's ridiculous. Silver down over a half percentage point. All right. Moving on to agriculture. Let's go weekly view. Ag has been under a lot of pressure these past couple of months, but last week was a bit of a game changer. You had a bullish reversal bar on corn futures. And the good thing here, if you're bullish on ag or corn, is that there was no new weekly lower low last week. So prices are stabilizing. Let's take a look at soybeans. Soybeans, strong week last week. Would I be a buyer here? No. Why? Great question. The reason is that we had a big breakdown the week of the 24th of June. Last week, we did a touchback to where? To the upper band of the declining downtrend channel. There was no breakout last week. So if you're buying now, you're buying into a resistance level. That's no bueno. If it manages to break out, close above last week's highs, then I'm a buyer. Till then, no. Wheat, two back-to-back strong weeks on wheat. We have resistance above, and that's at the 21 period EMA, exponential moving average. Volume was pure last week, mostly like pure buyers last week. Only 4% sellers. What else do we want to go over? Let's take a look at protein. Lean hogs. They were up last week after taking a break. Copper, that it did really, really well last week. Look at this reversal bar on copper. Cattle. Looking a little bit toppy here. I wouldn't short it. I wouldn't buy it yet either. You have too much overhead supply on cattle. Bitcoin was down pretty big earlier. It's now up. So we're into a new trading day, I guess. We did nat gas. Yeah, nat gas is bouncing back. I just added that position, we were down a percentage point. Now we're coming back a bit, down 0.65%. And take note of this 15-minute chart. What are we seeing on stochastics? Higher lows. Good volume bouncing back here. Volatility is down at current. That's the VIX. 10-year yield, 30-minute chart. Trying to do an outside reversal bar or a bullish engulfing bar. That's another one of my top 5 favorite candlestick patterns. Again, linked below. Okay. Let's get to it. Let's go to comments. Say hello to folks. Quiet night tonight. Only 24 people. Real quiet night. Can cane sugar go higher? I will need to take a look. Believe it or not, Thinkorswim does not give you sugar. It offers it to you, but it will not populate the screen. So we'll check out the continuous contract on stockcharts.com. They're pretty good with the continuous contracts. Is the new symbol for fun is the new symbol for 6. I wonder why they changed that. All right. Gotcha. Okay. JFK, I want to go all in on silver. Talk me out of it. Not me. I'm not gonna. I think it's going up higher. Okay. Let's talk about economic data for the new trading week. We have on Tuesday, this could be a catalyst for the small cap names, the NFIB Optimism Index, that is the National Federation of blah, 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 blah. It's a small business index, their sentiment. On Tuesday, we also get some Fed heads coming out. Fed Chair Powell, that will be highly watched. That's at 10 a.m. So be careful, you zero DTE traders out there. Wednesday, wholesale inventories. More Fed Chair Powell. He's going to be at the House. Oh, so he's doing testimony. He's in front of the Senate on Tuesday, at the House on Wednesday. He usually repeats the same thing. Of course, he's going to get questioned. Thursday, initial jobless claims. We got that last week, as we do every week. Consumer confidence comes out, CPI. That's the measure of inflation at the consumer level. And on Friday, we are going to get PPI. That is the measure of inflation at the producer level. So these are obviously very, very hot topic data points to watch out for. You saw for the past several weeks, you've seen the commodity basket pull in a bit. So I'm not expecting a very hot number here. Now, on Thursday, we did not meet. Normally, we would go over this chart. This is the Federal Reserve's balance sheet, and then it continued to drop off more debt off of their balance sheet. Earnings this week, folks. It begins on Thursday, Pepsi, Delta, but the Pimp Mac Daddies of the week are going to be JP Morgan, Wells Fargo, Citibank, and to a lesser extent, Bank of New York Mellon. So it's here. It's silly season. The bell has rung. It has begun. Get ready for the spin doctors on CNBC, Fox News to turn chicken poop into chicken salad, and because they want you buying stocks. As I mentioned earlier, the left wing over in France has upset Marine Le Pen's party. So they have gained control. And I love France. Been there. Beautiful place. But it's going the wrong direction. And it makes me sad, to be honest with you. Hi, Bob. Can you look at monthly of WRK? Sure, I can do that. So the only reason why I bring this up is for Forex. Watch the euro. Watch the euro. This could impact the euro. Okay, so I want to go back for a moment. I want to talk a little bit about last week's jobs data. Excuse me. Well, yeah, jobs data, but other reports as well. Job openings increased, which is a good thing. ADP employment missed. Factory orders tumbled. They expected expansion. They got contraction. We had the U.S. his non-farm payrolls. Now, this number here is actually a beat. So you should be saying, "Hey, Bob, why are you so down and sad about the doom and gloomish about the jobs data last week? There was a beat. Why aren't you clapping your hands and saying, wow, this is great news?" It's because it's going to get revised down. They reported this number, but everybody wants to focus on the headline number. We don't do that. They revised down 3 months worth of jobs data. So what happened to the unemployment rate? Even though we had a rise we beat expectations on jobs last week, yet the unemployment rate moved up. That's because of the revisions from the 3 prior months. And I'm surprised it wasn't higher than 4.1%. So it's clear from, if you take a look, and I should have brought it up here. I didn't, my bad. Perhaps I have a version of it here. The U6 and the U3 unemployment rate are, no, I don't have it up here, are hooking up. That is a precursor for recession. Add to that this here. We talk about this all the time. And members hear me talk about it every single night that I do a market wrap or a morning update or a closing call. We look at the yield curve. The yield curve is a statistical harbinger of bad news to come when you get a steepening. Now, when did we peak out last on the yield curve steepening? Back in October of last year. What happened in October of last year? The current stock market rally began. So what happened last week on a yield curve? It broke out. It broke trend, and we closed there. I suspect what's going to happen this week is that we're going to touch back. We're going to do a retest of this breakout point. Now, what might this look like on a monthly chart had we closed out the month on Friday? Obviously, this is going to change for better or for worse by the end of business, final day of trading in July. We have a breakout on a monthly time frame on the yield curve. So buckle up, folks. This trend, look at this consolidation, a very long consolidation. And the greater the consolidation, the greater the validation of any breakout. And what I also need to do here is update this chart because we have the mother of new higher lows. Look at RSI hooking up, Stokes threatening a hookup. So what's happening here, right? Let's take a step back and take a step back in time, right? I'm going to bring up a different version of the yield curve for a moment. And I know there are folks out there who's talking doom and gloom. I'm not saying go sell your stocks tomorrow. Not doing it. All I'm saying is get ready. Get ready. Know what's happening out there. Know the history of what is happening here. Here you have prior peaks in the equity markets. You have the S&P 500 in gray, obviously the yield curve in candlestick. And when you get an inversion of the yield curve, the S&P 500 in gray rolls over. That was 2000. Here's 2007. Here is 2018. And of course, we had 2020. So here we are breaking out. So a lot of people are looking at this. They're looking at the Federal Reserve and the probability of a cut, which is now at 77.6%. It looks like it's a go for a rate cut in September. The question is, why are they going to cut? Why? What are they addressing? You still have job expansion. You don't have no job growth. It's expanding. You still have inflation. It's nowhere near the 2% target. What are they addressing? What are they so concerned about? So historically, when you get a rate cut, that generally marks a stock market that is going to go into decline, and they always do more than one. So be aware that this is out here. The uninversion of the yield curve is very, very close. The longest inversion of the yield curve in history is coming undone right here, right now. So a little bit about the debt. To me, the debt is the big problem here. This is absolutely insane. Annual U.S. government spending reached a massive $6.5 trillion in May, just $1.1 trillion below the March 2021 record. We were in an emergency situation back then. The government total outlays have doubled in just a decade. To put it into perspective, this is more than the size of most world economies except for the U.S. and China. Meanwhile, the U.S. budget deficit hit $1.7 trillion or 6.2% of GDP over the last 12 months. In the past, such levels of spending have only occurred during major crises. What's the long-term plan here? It looks like they're trying to break the dollar. I don't have any other explanation. They're printing money to send it overseas. Then it comes back through corporations who are selling the products over there. We're still being taxed to death. They're still getting subsidies. So it looks as though they're trying to break the dollar. That's my take on it. And you saw last week the bearish reversal bar on the US dollar. You saw gold begin to take off. I'm surprised Bitcoin is tumbling as it is lately. Even with the equity markets moving up higher, it's usually treated as a risk asset, but right now it's not for whatever reason. Probably something to do with the halving. So right now, the debt of the US government alone is the third largest economy in the world, the equivalent of. So the jobs came out last week, and all jobs are not made equal, right? You have jobs that add to GDP, manufacturing, construction, because they're producing stuff. They're making goods. So where did the jobs go for last month? Education. We know we're not getting our bang there. We're not getting our bang with education. People are more stupid than ever in this country. Health services, that doesn't add to GDP. Government certainly doesn't add to GDP. So the two top areas that are seeing jobs do not add value to the U.S. economy. Mining, zero. Manufacturing, contracted. Can't make this stuff up. Jobs. You can never take if there's one area where it's hard to make the argument that the stock market treats bad news as good news, it's with jobs data. The stock market is very sensitive to jobs reports because, you know, you're playing with the third rail of the economy because the consumer is the backbone of the U.S. economy. And right now you're seeing those who are marginally attached to the workforce. Fred names it employed, usually work full-time. They're marginally attached to the workforce. They want a full-time job, but they can't get one. That is declining somewhat. So with jobs that are job openings widening out, why can't people get jobs in this economy? It's very strange that this number would be declining. It's as if there is a bit of a divergence in the jobs market. I don't know whether or not it's because the jobs are being taken up by the U.S. government. Healthcare needed special licensing there. Not quite sure whether or not it's due to the fact that they're counting in people that shouldn't be here, illegals, and they want work, can't get work. Not quite sure. We know that most of the jobs that have been created over the past 4 years have gone to non-citizens. That's a fact. Look it up. Schiller PE ratio, 36.25. The last time we spoke on a live stream, it was just below 36. So this equity market is very close to taking out the highs of 2020. We all know what happened back then. I'm sorry, that was 2021. My apologies, 2021. Buffett indicator, overvalued the equity markets just off of that 2 standard deviation extended move relative to the mean historical trend way down here. So equities are priced for perfection. So if you see disappointing numbers coming out this earnings season, you're probably going to see a magnified impact on the equity market. I'm not predicting it. I'm just saying that that's probably what's going to happen. It's not going to be treated well by the equity market. We are very, very expensive. Add to that the fact that the put-call ratio drops to its lowest level since January of 2021. What does this mean? What it means is that nobody wants puts. No, everybody's bullish on the equity market. So the way you look at this is that this is a sentiment indicator. You're seeing VIX weak in the double digits, I should say, double digits. And nobody wants puts. They all want calls. So therefore, you have a crowded trade in the bull camp, and you're seeing the advanced decline line on the NASDAQ not validate last week's upward move. You saw advancers, fewer advances versus decliners last week. The market was driven by only a few names, as has been the case for quite some time now. Now, here's what I think is going to happen to the United States not too long from now. We have the probability of a rate cut in September. You have what you call the law of diminishing returns. So they began quantitative easing back during 2007, 2008, and they began it again in 2020. Only that time they had to double down because the law of diminishing returns. The more you go back to QE, the more you need to print, the more money you need to print. This time around, they're going to go crazy. Money print to go. Burr it's going to be in hyperdrive. So you could expect the expansion of the Federal Reserve's balance sheet, which has come off quite a bit. We're going to be taking out these highs. It's taken what now 2 years to come off the highs to reach a point where we have reached right now. It's probably only going to take a couple of months for them to print more money to buy back treasuries and take us out to new higher highs. Only a couple of months. Because, and here's what I was trying to say before. Tokyo Stock Exchange just got back to where it was back in 1985 to 1989. Why? The Japanese are seeing massive inflation over there. So inflation impacts everything, stocks in particular. And you're seeing it here in our equity markets, except we're setting up for a probable sell-off in the equity markets in the coming months. I'm not saying this week, I'm not saying next month, but it's setting up for that. History is beginning to repeat itself. Yield curve steepening. Rate cuts are coming. So, and the Japanese yen has seen a weakening dramatically. And that's reflective of the inflation over in Japan. Now the US dollar has done a reversal. That's beginning to weaken up. Japanese yen's beginning to firm up. And I think that after they do the next round of rate cuts here in the United States, you're probably going to get a massive, massive rally in the US equity markets, probably the peak for quite some time, but it's probably going to be Argentina's style blow off top, where you have massive hyperinflation. And if you don't own assets, you're going to be left behind. You got to be long of the equity markets. You need to be long of anything that you could drop on your foot and it hurts. That's what you want to own. Gold, silver, oil, anything that you could drop on your foot and it hurts, you want to own. You need to own tangible assets. All right, so we were talking about the euro earlier. We're at the lower band of the decline, yen. We're at the lower band of the declining downtrend channel. I'm predicting that we're going to get a rally in the yen, therefore a pullback in the US dollar, which flashed a bearish key reversal bar on the week last week. It closed right smack dab at the lows of the week. I think we pull back further, even though we are up in the pre-market. Gold. This wants to break out. We will quite possibly, daily chart, quite possibly get a bit of a pullback here. That pullback is to be bought right here. So if we pull back, come on, go away. Microsoft. If we pull back to 23.50 the ounce on gold, I would be a buyer. Momentum looking very strong. And let's just take a look at how we look on a monthly time frame. We're very close to taking out last month's highs on gold. The trend is clear and defined on gold. It's going up higher. The same can be said true of silver. Silver has already taken out the highs of last month, which is a reversal month. We have now negated that. It looks as though we're going up higher on silver. Very, very bullish. Palladium, which we put a trade on a couple of weeks ago because it stopped going down. Now we have a breakout on palladium. Watch for a check back and a retest this coming week, or this next month, I should say. Next month. This is a monthly chart. Momentum rising as measured by RSI stochastics. Volume last month, awesome. MACD, positive. Good looking stuff here. Palladium, bullish. Look at the consolidation. And once we break through, let's call it 1150 on palladium, it's going to do a moonshot. All right, let's do some chart requests, and we will call it a night. Fun. Wow, this thing is still ripping. Let's do monthly chart first to get a vibe. Wow. Really, really nice stuff. So where we're at here on a monthly time frame, and you can see that this is Trend Spider, link below. Get our discount code, 35% off minimum. They may even have a bigger one. Just use that link below. On this monthly chart, I have a quarterly chart overlaid reflecting resistance in dashed line in solid green. You have monthly resistance. They are on top of each other. We're at measurable, actually, we're just above this with quite a few days left in the month. So I'm not a buyer here. If we close out the month above this resistance level, I would look for an entry point down here at a retest at around 57.25 per share, around there, give or take a dime. But I do think it's going up higher. Weekly view. Again, above quarterly resistance in red. What a run here. Holy cow. Daily view. Looking really, really good. But the only, I like it quite a bit. It's extended. We're right at the upper band of the trading range. I'm not a buyer here. I would be on a pullback, though. I think the macro story here is quite bullish. So fun. Six Flags Entertainment Corporation. Longer term bullish, short term bearish. On a pullback, I'd be a buyer. Sand. Sandstorm Gold. We likey. Look what they did here. So, you know, the big money is moving in when you have a long consolidation and all of a sudden they break it below key support and then they reverse it higher. What that is, that's a tell. That's the market saying you have big funds out there. They can't buy on the breakout because they send the stock flying. They need to take out all of these stops that are below the support level, and that provides them liquidity so they could buy the stock without moving the stock all too much. So you can see that they've broken. So this is a buy. In short, buy it. Buy it. Weekly view. Higher lows. Got a breakout. I think it goes higher, longer term. You know, obviously you're going to get your backing and filling. You have overhead supply here. It's not going to go straight up. You're going to get backing and filling. That's a healthy thing. That's fine. Daily view. All right, so we had a gap up on the 3rd, doji star formation on the 5th. We filled the gap. I think this goes up. I'm a buyer of sand. I like it. Bullish. Jeff, CCL, you got it. Larry, I didn't forget about sugar. We need to go to another charting software. What did I do? I got sand, 6, WRK, West Rock Company, monthly chart at current looks very, very solid. It just bounced or reversed off of the lower band of the rising uptrend channel. That's your buy point. That's your signal. We broke out of a triangle formation. Volume on the month so far is awesome. Really beautiful volume. I mean, we're only a few days into this new trading month, and we're very close to taking out the down volume of last month. So that's a huge tell. That's very, very bullish. Now, obviously, you could get sellers moving in here, and they could take the shares down lower. So that's why we want to go to a weekly chart, because if we have a bullish weekly chart, which I know we do, because we're just leaving the first week of the year of the month. We had a bullish reversal bar off of the rising upper band of support on massive volume. This is a buy. This is a buy all day long. Longer term, great breakout. I'm a buyer. Man, if they do a retest of support down here, and why is it not letting me set this up? What are we doing here? All right, it's not letting me, for whatever reason, do the alert. I've never had this happen. There we go. Okay, good. It's only letting me set the alert on a closing time frame. I'm not quite sure why. What's the volume here? Maybe it's thinly traded. Not quite sure. CCL. Carnival. Wow, this pulled back, huh? So Carnival, it actually took out the lows of 2020. We've broken out of that downtrend. We are putting in higher lows. What we're missing here are higher highs. What I do like here is this. We are breaking out with a higher low on stochastics. So what is the stochastics? Just not two squiggly lines. What it represents is momentum. Is momentum building? Are these two lines rising, putting in higher lows and higher highs and getting stronger? Or are they going the opposite direction? Are they losing momentum? It's obvious to me that what's setting up here is that we are consolidating. Let's get rid of this. We are consolidating into a very, very tight trading range. I think that this gets resolved up. My guess is that there's still probably a lot of shorts in this name yet to get squeezed. We broke out the week before last. Now we're going to do a touchback. So this is interesting. So it looks as though we're going to come back down here to around $16 and right at this volume shelf. 1633 is the number. Give or take a dime. It doesn't have to be exact. There we go. That's sensitivity. As long as we're in the neighborhood, we're happy. We'll keep this active a little bit longer. I like this. I love comebacks. Daily view. Yeah, so big short squeeze. This was just a sick melt up, and it's just coming off. That's all. Just lost a little bit of momentum. I like that 1633 mark. That's where I'd be a buyer of Carnival. CCL being affected by the storm. Good point. Very good point. Very, very good point, which brings us to seasonality. So let's look at seasonality here. I want to exclude and March. Let's have a pure view of okay. Okay. So the month of July is a fairly weak month. And believe it or not, when the hurricanes hit, that's when you begin. As a matter of fact, August is a time to begin accumulating a position on CCL because you have August and then you have a rally through December, which is the best month out of the year for CCL. So the way I view it is that this tropical storm is a great opportunity to begin accumulating, right? Because you have an event that's clear and defined. We know that there's going to be an end date to it. It's not a pandemic. This is an opportunity to buy the shares. I'm bullish on it. I don't own it. I have no skin in the game at this point in time, but we may. Let's go to comments. And I know, Larry, I didn't forget sugar for you. Let's bring up sugar, continuous contract, and we'll go to comments. And what was the question that Larry had? Can sugar go higher or double top now down? Okay, so great question. What we want to do is we want to go macro view. Where are we at? What does the market look like? So we have been in a downtrend. and we remain in a downtrend. We had a nice bullish reversal bar in June. Let's go weekly view. What do I do with it? They tried to break it out last week. It's got overhead supply in price and in the moving averages. Volume was light, which is good. Let's go daily view. Bearish reversal bar. I think it's retracing back down here to 0.197. That's the pivot point breakout, and it should find some support there. I think it needs to pull back for it to be able to rally yet again. You have still way too much overhead supply above. It needs a pullback. It got to wipe out some previous holders of the contracts and making way for more buyers to move in and allow it to break out through this overhead supply. I think we're closer to a breakout than what you may think. So to answer your question, to Larry, can sugar go higher? Yes, it can go higher. Or double top now down. No, I don't. I think that you're in a consolidation phase. I think it's bottoming out at current, and you're going to get backing and filling here. You have way too much overhead supply. Look at all of this busy work up here. In fact, let's bring up the volume shelves on here. Look at this. You have a wall of buying and selling activity, and we just fell right shy of it, right at this peak back in, I should say on, not in, on the second. So I think we retrace back down here, and then we move up higher. I'm not overly bullish on it, but I think I'm constructive on it. TZ Burton, welcome. On a report from Wednesday saying that could raise, it's not going to happen. They're not going to raise rates. Now with jobs, now with jobs weakening. They should have raised a while ago. They didn't, and now they're fighting with job losses, and you have inflation still out there. It's not a good situation at all. Stagflation. All right, everyone. That's it for tonight. Thanks for being here. Like, subscribe, you know the deal. And don't forget about my 5-part video tutorial, my top 5 favorite candlestick patterns. Link below. TrendSpider, 35% discount code. Use the link below. Have a profitable trading week. Members, I will talk to you in the morning. Till then, be well.